We're also watching gold pushing back above $1,500 an ounce after the Fed's announcement, and Jared Blikre is standing by for more details on this. We're going to get to him in a second on the gold futures, but Aikiko, as we continue to watch all the market action, it's interesting to see the way that the gold market hasn't necessarily played out in the way that we would think as a safe haven here.
Well, it hasn't, but we're seeing it push back above 1,500. And when you look at all the correlations that we usually do, I mean, last week we were talking about the bond market as well as the equity space as well. That correlation wasn't actually playing out as well. And so, you know, there is an argument to be made that maybe we're seeing people sort of pull out altogether and go into cash as well. We've got Jared Blikre standing by here at the Wi-Fi Interactive board. The VIX also closed at a record high yesterday. What do you have your eye on right now?
Yeah, so we're looking at gold. This is the intraday price action. We got so many headlines. Looks like we're going to get a lot of fiscal stimulus and also more intervention from the Fed. It's going to ease regulatory requirements, institute that commercial paper funding facility. So all of this is having an effect on gold. It is marching higher right now. Now, it had started from below 1,500 just before the market opened, and we can see it's advanced $42 net on the day, and that's good for an increase of nearly 3%, which is quite a bit for this market here. Now, we can also see what's happening in the interest rate space with the 10-year T-note yield. Now, that is even more elevated than it was, up 16 basis points. We have the yield curve expanding. So all of this is good news. It might not translate into higher prices for stocks that we keep on an immediate basis, but overall, I'd say we're marching in the right direction here.
We're going to be watching the oil market close in the next hour right now, but that's off another when we look at the prices back under $30 a barrel. Curious to get your take on what that means, because right now energy is the only sector in the red. So, I mean, when we talk about how important it is to see oil prices come back up a little bit to relieve this selling pressure, what do you make of that?
The energy sector is in real trouble here. There's no getting around that. Not only the energy sector, but the banks that have made loans to them. There are probably some banks in Texas that are going to have some severe problems here. These guys simply can't pull oil out of the ground and make money at these prices here. At least most of them can't, and that's in the shale oil space. Other producers, the traditional ones, they have it a little bit easier. But at $27.98, you got OPEC in a price war with itself and with Russia. I don't see any of this easing anytime soon. Now, the only thing that's going to put upward pressure on prices is that a lot of these shale producers are going to shutter production, but that's going to take a while, and it's going to take a while for existing supplies to work themselves through the system here.
Very quickly, Jared, when you look at who's actually leading today, I mean, it's all sort of relative, I guess, given the drop that we saw yesterday, but we have seen consumer staples, for example, being some of the safer buys that are out there. What are you seeing today?
Well, let's take a look at the sectors that are leading today. And this is pretty interesting because with the 10-year T-note expanding along with the yield curve, usually we would have some more plays like cyclical and value, but we're not seeing that. This is very defensive. So utilities is in the lead. It's up 11% after getting whacked considerably over the last week or so. Staples, real estate, and then we have tech and healthcare. Now, all of those are outperforming, so it's nice to see tech outperforming. To the downside, energy just can't catch a bid because, as we spoke, crude oil under pressure, then industrials, which is a cyclical, and then consumer discretionary, which is a cyclical. These guys just really are underperforming right now.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.